No, Jay, I think you were second. Grand Rising got there first. So let me know that you're hearing the sound all right. All right, that sounds good. I'm going to switch around a few screens to make sure we have good audio here. So hello everyone. Just making sure the sound is still good on all these screens. So just I'm going to flip through some screens and make sure all the setups are working right. Okay. So here we go. Continue to go on. This should be working. Um, yep. Test. Welcome everyone. Looking forward to today's stream. Do one more test here, and I think we're good to go. So we'll get going in just a few minutes. We'll let the room fill up just a little bit more, and give me about 5 minutes. Got to get the Runa, get everything going. Good. Okay, folks, just give me a few more minutes, and we'll get going. Yeah, so just let me know if there's any weirdness. I'm actually using a headphone mic, but I don't want to put the headphones on. It's 3 hours with those things on or too much. So we should be in good shape. I'm going to put you over to a screen where we can watch the markets trade for a minute. You have the futures up 11 handles. Now I'm going to address everything, the NASDAQ, the rotation, everything that's going on here. Thanks, Po AG. Appreciate it. Yeah, that's good, Steve. I'm glad. Just give me about 2 minutes and I'll be ready to go. Just about ready, everyone. No, just getting ready to go there, Leva. Okay, everyone. Good afternoon, good morning for those of us out on the West Coast here. Uh, it is this time of the day, Runa time. One of these is equal to 3 espressos. So you got to pop it and get ready to go. So thanks again for taking the time out of your schedules to hang out with me and go through the markets and all those fun things. There's a fair amount to talk about, I think. Uh, Markets are just stuck in this range. They just can't get out of it. Uh, NASDAQ 13,200, S&P 3940. Obviously, we saw the Russell get hammered, so I'm going to go through all the normal details. I'll spend the first hour just going through all the primary markets and what's going on there. As usual, I'd like to start off. Yeah, Carlo. Hey Jay, if you see Carlo's stuff, just remind me to talk about that when I get into these live streams. Once I get going here, I'm just going to flow. So you may want to ask that again there. It'll be about the better part of an hour before we'll start to get into more randomness from the standpoint. So as usual, I'll go through equity markets, interest rates, and the dollar, and then Bitcoin and all that stuff. So we'll do that whole run like I always do. Excuse me, sorry, but let's not the Rona, okay? But let's talk about a couple things that are going on in the world now. We watched this 1.9 trillion dollar stimulus, and this is something I try to relay on my daily videos. I think it's important to understand is that what is going on right now is this new administration, they're floating balloons out there. They're going, hey, what do you guys think about this? And they're using markets and other rhetoric and social media to actually get a feel for how these things are working. Like, for instance, okay, we passed this big stimulus. There wasn't very much that actually going to American people directly. We're going to spend a bunch of money on infrastructure and other projects, bailing out states that can't run themselves very well. And then now we're coming to the next phase, which is $3 trillion of more so-called we'll go stimulus, right? Is it really stimulus? I'm not sure. But what they're doing is going to execute this platform. And I saw a comment that really made sense early on when last night's video came out. I was just looking at some early comments. The person that said it, I see him around the channel a lot, so they're even a subscriber or regular watcher of my videos. And they made a comment that basically America needs to spend whatever they can to catch up with Asia, and that's absolutely right. If you're in Asia, if anybody's in Asia, you can confirm this. But you go to Shanghai and Singapore and a lot of major cities in Asia, and it's amazing technology, infrastructure, everything that has happened there. But and I agree with that's what's going on with America right now. The difference is, and I just want to, and I think we do need to modernize this country. I mean, it looks kind of the same. The cars are different. There's not a lot going on, and us Americans here, we think we're always on top of things. We might be the biggest economy, but we're not the most advanced in certain ways. So that's important to understand as well. So, are you guys hearing this okay? I just looked at the timeline. It should be fine. I'm going to go ahead and put the headsets on during this section just to get this on. Okay, that should get a little better. But the reason why I want to talk about this is the expenditures that we're seeing. I actually think the 3 trillion is just the beginning, that there's going to be a 5 or an 8, or they're going to keep getting larger as we go through. And I don't think the numbers are going to pass these things as far as the spending goes. They're going to create the money. And, we've got right now Powell and Yellen testifying, and they're just talking it all up, the entire narrative. And so much for the Federal Reserve being independent. It never really has been, but it's been touted as that. But what I want to point out here is that the difference between Asia modernization and the US is Asia did it through the trade imbalances. China had a $500 billion a year for the better part of 10 years and almost 15 years with that trade imbalance, and they poured the money back into building the cities and moving people in and everything. It's been a long time now. It's hard to believe it's been 20 years. I spent about a month in China, and I remember saying that if they figure out how to digitize this economy, it's going to be crazy, because they were still having yuan, and they could count money so fast. I've never seen anything like it. And they'd have this wads of money, and they could just count it. They'd flip it with their thumb and just count it, just hand it to you. It was amazing. And every street vendor, every store, everything you've seen was that way. So they digitized it. Then they took things to the next level, and then they really digitized where it's a cashless society now, especially in all the major cities in China. And if you don't have WeChat, you're not going to be buying or doing anything there. There's another app that I think Alibaba has or something like that. But here, I'll get to my point here. Is the point is that what's happening in America, let's say we modernize, we do all these things, we put these fancy underground tubes from city to city and do all that stuff. That's awesome. We need to do it. We definitely need that type of infrastructure build, but we're not doing it through GDP and growth. We're actually doing it through MMT. And I've spent a fair amount of time talking about MMT, which is modern monetary theory, is basically where you just make up the fiat currency and you spend the money. And that's exactly what's going on here. That it's not being done through GDP. They've taken the narrative, never let a crisis go to waste. And when 2020 happened, the system, they put trillions of dollars in there. And now all they have to do now is open up spreadsheet, add zeros, hit save, close spreadsheet, and there's more money. So one of the old factors in MMT was it would look at the cost that it would take to create the currency and get it into circulation and all those type of things. Because while it's called modern monetary theory, it's actually a very old theory. And the realities is that has gone away in the digital world. We live in a digital world, even though there still are dollars and currencies and those things. Most money, is transacted digitally through just our bank accounts and our credit cards and debits and all that. But from the infrastructure spend, what I believe is going to happen, and the money is going to be allocated very quickly. The projects are going to take tens of years to do. So, and especially if the government's going to run these projects, some of them will just be disasters and never get done. We already know that. So if the key will be, I think, I want to bring this up because I think what we're seeing right now in the markets are just that confusion trying to figure out what's next and where are we going to go. And before I move on to the markets, I just want to bring in one more factor here, is that you have the taxation issue. And if you're going to do MMT, think about this for a minute. If you're doing MMT and you can just create money, to spend all the to spend and to do these projects, what do you need taxation for? If you think about it, taxes now just become a penalty. They just want to penalize, and you can see they want to penalize certain groups. Okay, they want to penalize people over 400,000, whatever the number, it doesn't matter. But it's a penalty. It's a penalty for being successful. And this is what it looks like to me anyway, is that they're going to spend the money, they're going to build these infrastructures out. The people that are in the flow of those monies are going to do very, very well. And if you're not in the flow, like let's say you work in the hospitality world or something like that, then you're just going to be left behind. And ultimately, this whole strategy in the, I guess we'll call it in the name of equity, and is going to create the most inequity that's ever been known on the planet, because the people that have are just going to have more. The people that don't have anything are going to have less. And it's not, the strategy isn't going to be all inclusive as it's being played out to be. So there's kind of a smoke and mirror thing going on. There's been other times in the economy, but not at this scale ever. So things are happening faster and faster and faster than they ever have. And so I guess what I'm getting here is this is the backdrop. A very good friend of mine used to always say, every time I think I figure out where we're at and what's going to happen next, they change the background on me. So you have to kind of look behind the background, and this is the background, is this financial spending. And I think overall it's going to be very positive from the standpoint of what's going to happen with the markets. I don't think it's going to blow up. I don't think there's, the bubble, as long as you keep hearing and reading about bubbles, they're not going to happen. And I talked to a good friend that's a good analyst just about a week ago, maybe 10 days ago. And, he's big time on the bubbles and everything's too far. And I'm like, not yet. It's not there. I get where the theory is. I get what everybody's looking at. But, the model for all this is Japan. They actually have been running QE since around, I guess, 91, 92. They've been doing this. And even to the point where they own the BOJ, the Bank of Japan, owns 70+% of every ETF in the marketplace. So they just went totally nuclear a number of years ago, and they said, okay, we're just going to run all this stuff. The people are going to work, and there's going to be a flow, and that's going to be it. So that's engineering. That is the model to watch for, and this is going to be done here, and I think it's going to be big. I've joked before that I'm looking at the futures trading at 39.15 right now. They could be 10,000 3-5 years from now or less. Everything's going to happen very quickly. I think there is going to be inflation from all this. There's going to be a lot of elements that are going to be important to understand and walk forward. But all of these things I just talked about are multiple years in the making. The money being spent, or let's say not being spent, but the money being allocated is going to happen up front. Then the projects are going to be executed. And God help us, because the government doesn't know how to do any of these projects, right? So if they're going to be in control, it's going to get really messy, like it always does. So we'll have to see what's going on. I mean, if you look at from America viewpoint, if you look at what's going on here, they're trying to restructure. They're not trying. They're going to restructure the Postal Service, what delivery times. Every expectation is being changed in the name of basically, COVID, right? Oh, because of COVID, we can't do this, we can't do it. It's the opportunity. It really is the big reset. And if you're in the flow, most of you hanging around this channel and doing this stuff is, you're most likely in the right spot. If you have the ability, even at some level, to play in the markets, you're going to be able to participate. So just want to get some philosophical stuff out. This stuff goes through my head when I'm doing the videos every night, and there's no way that, I try to keep the videos down to 12, 15 minutes. Sometimes they extend out to 20, depending on what's going on and how much energy I have when I get to that point of the day to do those videos. But it's really hard to, I guess, articulate these things in that short video. So I always go into some of these rants on the live streams. Gives me a little more of an opportunity for you folks to find out a little bit more in depth what I'm talking about. And so I'm big. I love Bitcoin. I think it's awesome. I think there's a reason why it's near 60,000. There's a lot of things that are going on, but anyway, yeah, somebody's. I'm just looking at some of the chat after I went on that. Just yeah, it is, Leonard. That is very true. If you can't even talking about nightmare for tourists if they don't have the local electronic payment, which is primarily just WeChat, is good enough. But you're right. If you hand currency to somebody, you want to buy a service or food, or you're not going to get anything. They don't even know what to do. They just look at you like, what do I do? I don't know. That's funny, Steve. Yeah, you're probably right about that, Steve Weiser. So let me just look at a couple of comments here. Yeah, so I saw something else talking about forbearance, some of the real estate issues that are out there. And I know this thing is, winding, we got 3 months, I think June, I don't know the exact date when these things are going to happen. But they're going to have to extend all of these things that's out there. They're not going to be able to shut any programs. They're going to have to just keep extending and extending until hopefully the economy gets back online. So I don't see that as becoming an issue, that, everybody's going to get kicked out of their homes or their apartments. I don't think that is what's going to happen. I think they'll extend the programs. They'll enhance the programs. They're going to do a lot of things as far as the, they're going to keep doing more of the same. They can't stop now. So basically, universal income is here. Thanks, Soup. I appreciate it, man. Yeah. So yeah, I'm going to get to markets here in just a minute. So I just want to unpack this because this stuff's on my mind every night. So this is my venue to be able to expand upon some thoughts and some philosophies and all that. And it really, everything I'm talking about is, there is no answer. There's no right answer. Will it work? Won't it work? We will have to look back on history on this to see if it works or not. There's no way to tell. It may be the most amazing thing that ever happened to the planet, and it may be something different. I'm actually always and typically an optimist, and I want to see the world succeed, and I want us to get out of this crazy stuff that we're in right now. And it's like I've said, probably 100 times on this channel, we live in a world that it's very difficult to figure out what's real and what's not, and what's true and what isn't. And it's you really have to do your homework and pay attention and find good sources and things like that. So so anyway, so let's get into the markets. Let's talk about this. Yeah, I don't know. So what areas of the U.S. do you think are going to do best? Yeah, man, there's some good questions coming up on this timeline here. I'm going to address just a couple, and then we're going to go to the markets, and we'll take a look and just kind of dig into what's going on a little more deeper than I go into the thing. But I think obviously the hot spots right now are Texas and and rural areas. Like I know there's stuff in Montana blowing up. Basically, everybody's running out of California. So we're here in Arizona, and a lot of folks coming here in the neighborhood where uh, I live. There are only 2 homes for sale right now, and it's a reasonably sizable development. And there's nothing for sale around here. And as soon as something comes up, it's just snapped up. I talked to somebody in Australia last night, and they were saying that in the Australian market, they're not even putting prices on listings anymore. It's like, what do you think? And Australia always has had like an auctioning type strategy for years where they just have an auction and a bunch of people want to buy the house and they have a starting bid, just a normal auction type theory, and just see where it goes. And it looks like that's full on down there. So yeah, so yeah, as far as real estate ETF, as far as real estate goes, this is going to be the tricky part. So let's just go into some economics for a minute. We saw housing, new home sales actually down 18%. I mentioned this in last night's video. It was marked off as a weather issue, and it probably was to a point, but a lot of these numbers are seasonally adjusted, so they already basically are adjusted. I think it's more material than what people are telling you from that standpoint. But what it is they're not only are they're not selling them because there's not that many to sell. The inventory is drying up on new, inventory is drying up on the existing. It's just really, really crazy. Somebody told me in Miami or something, there's fewer than 10,000 homes for sale in the entire metro area. And that sounds like a lot of homes. It's not. And, we're talking about, millions of population, and there's 10,000. Yeah. So let's go ahead and dig into some markets here. Let's go on to a screen here. So we're going to go over to one of my primary screens here. We got the futures up 14 handles right now, up 0.36. NASDAQ is really under some pressure here, and I think there's a couple things, and I'm going to tie some things together. Obviously, Tesla's underwater. Our good friends over at ARK and Kathy Wood and the gang are just getting hammered, and maybe I'll go into a little rant on that. And I tried to warn everybody on the video I did on repackaging and rebuilding Kathy Wood and ARK Investments. Their strategies are extremely risky, extremely volatile, somewhere between 3 and 4 times the S&P volatility. So don't get in there and expect anything good right now. And they just got crushed for 30%. So that's really, yeah. So, my brother is somebody just asked about, that's residential, but what about commercial? My brother is a commercial real estate guy. And we had a conversation. I've been trying to get him to come back on the channel and just talk, and maybe as a call-in, as he's in that loop. But he's primarily in multifamily, so multifamily is still doing quite well. As far as office buildings go, I need a good contact to really find out what the status of that market is. Is everybody going to be on a hybrid model or whatever? That's going to be the difficult part to see what's going on as far as commercial activity, new buildings, all those kind of stuff that's going to happen there. Yeah. So so as we look at this screen here, we're seeing this thing just grind out. Since we printed a high the last 5 days, we just keep rolling down. We look at the PPMs here, and these are important part of my analysis every day, as you folks know that watch the channel. But I just got up on the screen here. I've got ppm 1 and 2. I talk about no VIG. There's no acceleration. There's no trend here. And we're just climbing in between now. We were holding the 10-period moving average. Now that's getting harder to do because as we look at the market grid here for today on the futures on the daily, I talked about last night that 39.12, then R2 was 39.26. So we got through 12, and that changed the flip to the script. And if you're watching my videos, sometimes I'll tell you if it penetrates R1, then look for it to go to R2, and then you flip the script as far as what the analysis was, and that's why I put out the market grid. So last night I was talking R1, maybe S2. We got down to 92 last night, which is basically just short of S1. We did that overnight. It took out R1, so it flips the script to an S1 R2 number. So as soon as you take out that, then you look for R2, and we came just shy of R3. So we completely flipped the market by taking out these numbers. And these are to be looked at as pivot numbers because they're making, when this happens, all of a sudden the bar expectation for the bar is different. So now we look at the 10-period moving average, which is the fast average in this grid here, 39.28. That maps out to R2. So now the 10 is in the upper range of the market grid, and the market grid is going to stay about like it is. It's going to stay flat as we come into tomorrow. So 38.47, 39.42, about 100-point range is going to be projected in these Fibonacci ranges. So obviously we'll cover that in tonight's video, but this is climbing now. We're sandwiched between the 21 and 10, and this stuff happens a lot in moving averages, and based on the ppms, there's really no trends or any support or resistance that's significant. So we have to go to the daily ranges, we have to go to the Fibonacci stuff to actually figure out what's going on there. So basically we end up with a short of an S1, but an S1 almost an R3 for today. And I suspect it's mostly played out. I don't think we're going to see much more to happen here, even with our good friends Yellen and Powell talking it up in front of Congress. But the momentum is just non-existent. So let's go to SPX and break down some of this. You're going to see the same type of trends are very similar. The difference, sometimes the futures look a little different just because of the trading hours and the longer trading sessions that we see here, and they get influenced by that. So yeah, 313, 313, 320s, probably 315 in that range is pretty substantial. Yeah, so but as we look at the S&P here, let's go over to the weekly, because what we're doing here is, if you look at the weekly, I talk about this all the time. When you want to do something like I do as far as your analysis goes, hang on here. What you want to do is you want to do something very similar in how I do things with my analysis. I'm hoping that you folks learn it from me as I'm doing my daily videos, because I always look at daily, weekly, monthly. You want to have a context within all the trends. Sometimes short term's down, intermediate's up, long term's up. That's basically what we have right now. And I continue to, as we go to the weekly chart, this continues to be the driving force in the trends. And this the 10-week moving average is 38.47. And that's basically, we traded a little bit below it 2 weeks ago, but we're just holding this 10 line just straight up. We got a 0.41 ppm1. That's this indicator. ppms, if you're new to the channel, are price, pressure, momentum. They give us probabilities on a market holding a value of a moving average, and that's one of the things that I did way back in 1984. We figured out, one of the things we wanted to figure out was, when was a moving average going to be a valid trend line? When was it likely to the market to stay above it or below it if it's in a downtrend? What were the probabilities, and how could we figure that out? So we spent a lot of time, and that's what these ppms are giving us, the probabilities of the market being able to hold a value. And right now there's a 60% probability that it will stay above 38.47. Now we're not trading anywhere near 38.47, but that tells us that the trend is there. Any of these numbers down to 38, like we printed 38.86, all those numbers, there were a cluster of numbers down in there on the daily, and that's right where we bounced from. We printed 92 overnight, and here we are back about 30 handles higher, just grinding this out. But this, on the market grid, this looks like to me that we're going to need, and if we do that, we could see ppm1 start to turn up. ppm2 here on the screen, let me draw this in so you know exactly where I'm telling you about. So ppm1 is right here. It's trying to break out, and ppm2 has already broken over its first second derivative. ppm3 is in that maintenance mode now, where I talk a lot about. In fact, I need to take this off so I can show you a little more and how these work. And these weekly trends have been in place for a while, and what this is telling us is that we're going to continue along this trajectory of this trend. And so this is obviously the trend, right? We've got this big upward channel that we're going. The market grid on a weekly is defining most of the highs. If you look at market grid, only about roughly about 14% of the time will it ever get above the projected market grid. So you'll see little spots where it will get above. For the most part, it defines the potential range. These come out at the beginning of the week, and it defines the potential ranges that we're likely to trade in. They're really good on the short-term market grid, intermediate on the weekly to trade off of. But what happens is these are based upon daily or weekly or monthly range volatility. So they're similar in some ways to what the Bollinger Bands are. Bollinger Bands are based on standard deviations. This is based upon actual daily ranges, and it has a 3 and 5 day look back with a Fibonacci grid that's generated. And what it does, it gives you some pretty decent resistance and support numbers intra-week, intra-day. And actually, if you had this stuff on TradeStation, you can do it on a 1 minute graph and a 5, whatever. It will take any graph and map this stuff out bar by bar and projecting out on the next bar what the probabilities are based on the current volatility, or the look back of, at least in this case, 3 weeks. I just want to explain that if you're new to the channel and you haven't seen this stuff before. But what happens here, this is very typical, is what happens is we start to get into these ranges where the market grid literally goes flat. And this one I talked about on a couple of nights ago, markets to remain choppy. I think we're going to stay in this range. We could actually punch out a new high. We could print 4,000 in this pattern. If you look at the, I'll show you the grid here real quick in a minute, but we're going to stay locked in here. These numbers, this 10 period moving average, I'm going to clean this up. It's getting too messy already. So this red line here, this is the 10. It's running at this slope. The 21's running at a slope, as is this one, and that is actually, that's likely to continue that range. Once we get into, as we look at the ppms, and this is a pretty typical talk here, And what happens is each one of these ppms down here represent a different length of moving average. So the first one tracks the 10 period moving average, the second one the 21, and the third one the 40 week. These are simple, and what these do is they tell us those probabilities I was talking about a minute ago. And then when we get into trends, they go into what I call trend maintenance mode. It's not about divergences, none of that stuff like you look at an RSI or overbought, oversold indicator. It's not. What happens is you get into this trend mode, and these values here, like this is 0.41, this is 0.84, and 0.59. You end up, all you have to do is maintain a 0.25 or greater to have a trend that gives us anywhere from a 60% to a 40%. And it also tells us we can cause this thing to look forward a little bit. And the way that we do that is just looking at the arrows that I've drawn on the page here, because that will give you the trajectory or that trend looking out maybe 3-5 bars. So right now, as we look at what those averages are, we're looking at the 10-week moving average, 38.71. It is rising about 20 handles per week, so it's going to be basically 38.90, 38.15, and so forth in the next few weeks. That's going to be your major support line, and what I refer to a lot is it's what I call the demand line. So that's where the buy the dip has to happen, around that number. If it dips below it, then it's still a buy as long as these ppms are pushing 0.41, and on a weekly basis they don't change in value that much. It would take quite a bit of a move. We'd have to trade all the way down to the 21 period moving average to get that. So this is actually really important to understand the concept, because this tells us the trend is on an intermediate level is actually driving the action, and what we're seeing on the monthly, or I'm sorry, on the daily, is just the noise. So that the noise is defined by the daily, and the noise can be very choppy, and that's what I'm talking about. As far as this pattern goes here, I believe this 10 period moving average is going to be that primary demand line. We're going to look at the monthly here for just a minute, and the monthly even has even more upside, or that trajectory is pretty huge. You can see that ppm1 is at a 2.56, 1.46, and 1.07 on that monthly. And it's interesting because way back here in 2016, the market actually went to that 40 period moving average, and if we watch it accelerate back up, get back above the 10 period moving average, ride that, we traded down to the 40 again, and when that happened, the 40 average was in this little choppy zone, just like what we're not quite in that yet. We're still in an acceleration phase on the monthly. So there's no way there's a major collapse going to happen in this market at the moment. We're going to see further consolidation, and most likely this trajectory that I've been talking about on a monthly basis, that's 35, 33. So, but that number is jumping just about 100 points per month. So we're just about at the end of March, which is hard to believe, but we're going to jump another 100 points on this value. So now it's going to, it's going to be, right now it is 35, it's going to be 36, and 37. It's going to catch up. So if the market stays sideways for 2 or 3 months, the support line and that demand line is going to come underneath that on the secular trends. And this same thing, I'm going to flash, I'm going to use the S&P as a model for everything I'm going to talk about. So I'm using this, so think of when I go through NASDAQ here next and the Russell, I want you to make sure you keep all of these concepts and thoughts in mind here. The NASDAQ and the S&P are mapped better. The Russell has been a strong market, but obviously we've seen a lot of pressure coming in there. So let's go ahead and go next to the NASDAQ here. And let me back this off to a daily. And just like with the S&P, we're trading in between the 21, in this case 21 and 40. The 10 is in the mix too. The one, so we're looking at 13,169 on the futures is major resistance. We've traded up there a couple times. We're looking at the PPM. There's not a breakout pattern here, but I talked about this even in videos, or I talked about it last week because I go into depth, is I really think that the NASDAQ is setting up for another run, which means it's probably going to steal back that leadership that we've seen back, even though we're seeing a little bit of the opposite today. I'm going to show you the spread NASDAQ versus, or the Russell versus NASDAQ here in just a minute. I'm going to go through NASDAQ, Russell, and then I'll go through the spread. But what's happening here is that the markets are stuck in the sideways range, but we look at none of the PPMs on the daily, just like with the futures, or just like with the S&P, are in trend mode, but we do have a bit better formation on PPM 1 and 2. But what I believe is going to happen here, I'll draw this in, is that we're going to get above 13,200 sometime in the next week or so. We're going to get above that 40 period moving average. And once we get above that, then we're going to start to move toward the ATH all-time high, because that is going to be exactly where this market wants to go to. So there's going to be a play. So while we see the Teslas and the Apples under pressure, there's going to be a play in those stocks. So I will go through those as well when we get into the individual stocks. But there's going to be a number of ways to play this idea that I'm throwing out at you, and this is also good to understand. And if you happen to be a WaveTech software user, you can put these stocks in there and just look for short-term buys and be able to play those pretty effectively, even though I'm going to bring up our database when I go through all this, because our database on a short-term basis is down at 18%, which is kind of disastrous, but I'll save that. But this NASDAQ pattern here is very substantial, and what I want to show you is, and we could see one more leg down in a retracement. And I'm not hedging the pattern, but I'm going to draw it in so you can. I'm going to draw in my preferred view of what's going on, and then I'm going to draw in the alternative of what's going on. So we've got I'm going to draw in all these patterns here. So we've got what's important to understand. Most of you may or may not know, but I'm Elliot Titian by trade. WaveTech is actually a process of defining waves using moving averages. And so the wave counts that I come up with, I don't really promote wave counts and things on there, but the pattern, I keep it a little more simple, just looking at the patterns that are likely to unfold. And here's what I'm seeing on this thing. Everything you see in this pattern is in waves of 3. There are no 5-wave sequences that you can count. This is daily. So you could go down to hourly. Maybe you could try to dig deep to find some of this stuff. But on a daily, it's very simple. We've got this 1, 2, and what looks like should happen is a 3, which would set us up into a zone like this, up to maybe breaking above that 13,200, getting us close to the all-time high. And that pattern looks fairly plausible because of the configuration down here at the PPMs, and at the PPM 3 probably will not kick in here until we get above that 40 period moving average, that 13.2, 13.130 range, right? And that's going to be still resistance. But this pattern should set up and at least go up to 13.5, maybe retest the high, the all-time high, and that may be the setup. I'm gonna go to the next level here in a minute, but that could be the setup for an entire new sequence on the upside. And like I said, I go back to my beginning comments that I had. is that we're really seeing something, I think, interesting. We're seeing exactly, like I said, I didn't expect to see the team set up like it is. I talked about last, probably April or May, that the Fed needed to do the monetary and they need the Treasury to do the expenditures. Now that we have a new Treasury Secretary and it's Powell's old boss, and Yellen's very progressive, always has been. She was an advocate for buying stocks to support the markets. So now she's in the Treasury and Powell's there. So they have the team. The team is monetary and fiscal. And now you've already seen the comments from Yellen, spend and spend big and quick, right? So they want to spend all the money that you can. So, yeah, so yeah, I see somebody making a comment that it's not about the economy here, okay? It's about, you know, what's going to cause the ATH, the economy is not, doesn't support probably where we are now, right, on a lot of things. So it's not about that. You know, when you, sometimes there is a detachment. I've seen this many times. I've been doing this a long time. And this is not the first time that people act as if this is, quote, the first time the market and the economy are just are so far apart from reality. It doesn't matter. Okay. And I don't want to get into that rant right now. I want to stay up pretty. This is a positive looking pattern. This is on daily basis. So let's go to the weekly and remember the stuff that I covered on the weekly S&P. Similar, and I've talked about this. I know this stuff gets kind of old and long sometimes, but you know the markets. I always tell people markets unfold in weeks and months, not days and weeks. So you have to look at these intermediate and longer term to get a feel for this. And just like with the S&P, there's still a pretty good underlying trend. The only difference in the Nasdaq is that the ppm1 is at 0.09, so all of the support is being supplied, and we've traded right to the support multiple times now. Is that 21-week moving average 12,790, last night's low 12,788, so we're like trading right on that average. We're still printing down. We're not far off of that 12,914 right now. Last trade down 0.71 on the session. But this is your supply line, and the PPMs, in spite of this weakness, these things, every indicator you're seeing on the screen actually calculate real time. So everything that you're seeing here is actually reflected from the market's pricing, and there's only about a 30% probability for the market to close below that 12,790. Now, if you look back, just going back a few weeks, we spiked under it, but we didn't close under it. So on the 5th, the 12,589 was the 21. The low was 12,197. We closed where? 12,653. The 21 period moving average, 12,589. So we managed to get above it. The next week, we did same thing. Low 12,271. The moving average was 12,643. The close 12,924. It closed above the 21. So this has been what is happening here, and this is my religion from understanding how moving averages work and going into detail and understanding the indicators themselves have first and second derivatives. So when they're right now, there's some vulnerability to the 10, and we've already seen it go under the 10 and stay under the 10. But the 21 is in the opposite scenario where it's trying to turn back up and trying to cross over its first and second derivative. And that's where we come into what analysis I just did on the daily at 13,200 as that being a critical point in this pattern. And until you get above that level, you're not, we're going to grind this out. We might spike back below the 21 and rally back just to close above it again. But that number, that 21, is your demand line in this pattern. And the trends, 21 is at 0.70, ppm 3 is at 0.63. So all of these are in reasonably robust trend mode, and it just tells us we're going to continue to grind here. And so that's important to know. Let's take a quick snapshot of the monthly chart just so we can get a feel for that. And it's insanely bullish as we look back, plus 0.2.92, 0.25, not 2.9, but 0.25 is the trend. So this thing is just vertical, and that number is 11,935. You know, we're about what, a week from the end of the month, and this number 400 points per month. So at the beginning of next month, major support be that number, that 12,000, probably what's going to be 12,030, 35 in that range is estimating. So that's going to be major support, 500 points below here. So we're going to see, if you just kind of compile what I just went through on the NASDAQ, there's a lot of that we're locked in on a short-term basis in a sideways range. The intermediate has a demand line that is substantial at the 12,000. I have to go back and just, usually these numbers stick pretty good. Yeah, so it's going to be at the 12,780, 12,790. That's going to be your primary demand line. You might spike and trade on either side of this in this kind of configuration. But generally speaking, there's major support 300 to 500 points below here. And that's the maximum deviation you're going to see from this trend right now. Meanwhile, all of these trends are vertical, and they're going to continue vertical for multiple months. I mean, it would take, just like on a monthly chart, at where it's at on a 2.92 range, it would take 6, 8, 10 months of sideways to bleed off that type of momentum. And even if it does that, that 10-month moving average is going to come under there and be major support. Even then, it's going to have more than likely a very high probability of holding those numbers. So where we're trading now, I would say that 12,300 level is going to be rock solid bottom. If we print it down there, there's another buy the dip scenario from that standpoint, because that's going to be your extremes. And I think this all of these patterns we'll be able to read by looking at some of the Teslas and the Apples and some of the, maybe the FANG stocks plus Microsoft, whatever you want to look at. I think you're going to be able to see that. And once again, if you're a WaveTech user, all you do is daily models on these stocks. You should be able to pick them up and trade into this scenario that I'm talking about. Okay, so let's do Russell. As I go through the Russell here, I want you folks to realize that this thing went from the darling to just crashing out, and I saw this starting to happen on the spreads. I started to see the weakness coming in, and the other thing that probably that we haven't talked about is just the mainstream media. I mean, I've said this on nightly videos, is that you could just hear everybody screaming, buy the small caps. It was almost like, I don't like to go into conspiracy type things, but if you think about it, it's almost when everybody was screaming, telling people to buy that stuff, they were the sellers. You know, they were offering out. They were sell, while everybody telling you to buy, right? So they definitely did not. The market just got so frothy there, and it was everything everybody's talking about. So it makes sense that we're seeing this dip, and we've taken out all the moving averages. Like I said a couple of videos ago, I talked about that, and I think Yeah, I talked about this in detail that these small caps are overplayed and the mid caps same way. But let's take a look. So we're below all the averages. PPMs are negative. PPM 1 0.49. Let me move over to the screen so you can see it. It's at 0.49, and what that's doing there is telling us that we're in a big time downtrend. The resistance 2030 on the Russell, quite a ways above it, but that number is going to come down very quickly. It's coming down 0.5% per day. So we're going to see that thing end up to be, when it crosses over, when the 10, I'll tell you a crossover rule that I have, when the 10 and 21 cross, that will be a short-term bottom. It won't be a signal of an acceleration, but a short-term bottom. So 1021 crosses, looks like that's probably 2-3 days from now. Then you're going to get some sort of bounce here. And I saw a funny um, um, I saw a funny comment that all the animals are bailing out of ARK. I actually captured a really great image, a meme that was out there, that was really funny. I don't know if I can get it on screen so I could show you or not. But so the Nasdaq is happening. Let's go to weekly, and these trends are starting to not necessarily break down, but they're starting to set up a large consolidation phase. And if you haven't been around the channel for a while, if you have, you'll know this term I'm about to throw out. But most likely we're going to set up one of these dragon head formations, which is a high level consolidation. And the 21-week moving average is 2058, but this is weekly, so it is coming up at 30 handles per week. So that'll be right at 2100. We're trading 2171, so there's a little more downside. PPMs are still positive, even though they've cranked through their through the first and second derivative. They're still very positive. So we're trying to find that trend maintenance mode. And so we traded through the 10-week. Next target is probably the point where prices and where the current price and the 21-week moving average meet each other. Probably going to be around 2120, maybe a little higher than that. That should set up the low. That also sets up some of the things I was talking about, where you're going to get, some bottom on that crossover in 3 or 4 days. So these numbers are probably going to line up pretty good. Might be maybe Friday or Monday where we see the low of this particular pattern here. And so if we go to the final level here, and then I'll go to the spreads, we'll look at that. If we go out to the secular, it's just a moonshot, right? So we're just straight up, and the PPMs are completely crazy, plus 4.58 on PPM1, but that moving average is way down at 1777. It is jumping at about 70 handles per week, so it's going to be 1800s. It's going to take this, the phenomenon I was talking about. When you look at long-term moving averages, they're not in play right now from a support standpoint. What they do, though, is indicate the strength of the underlying trend. And so what we're likely to see set up here is things like we've seen set up in Tesla and Apple and some of these big markets where we go vertical like this. You'll set up a high level consolidation. So most likely this market's going to be stuck for a while. And I just went through all the scenario a minute ago that I went through just a minute ago on the NASDAQ, that I'm expecting a retest of the ATH. And meanwhile, this market on the Russell is the more of a high level consolidation. So the NASDAQ's going to play some catch up. The spread I'm going to show you next is probably going to continue to come in quite a bit. And then there'll be a secondary rotation, and we'll be able to go back into the small caps, the mid caps, value plays, all that stuff will come back in on the next cycle. And especially when we start to hear everybody say, that trade's not working anymore. When we get to that, gets mainstream, then we're going to be in pretty good shape to watch that, unfold. All right. So okay. So let's look at the spread. Let me move this off screen. So you can see we're upticking just a little bit on the spread today. And I think over the short term, we're going to see this thing just kind of stabilize in this level. There should be one more level down, probably from a spread standpoint. We'd come down. We're pretty close to where these last highs, probably into this range here, is going to be where the spread will pull back. But this is the daily spread, so I'm going to take you out and look at a weekly so you can start to get some perspective here. And yeah, unfortunately, it won't let me pull this back. But you can see we've got a nice little rollover going here, and it looks like it's going to be pretty substantial. This on a weekly, that there's going to be multiple weeks of this spread stalling. So that means that some days the Russell is going to outperform, some days it's going to underperform, and it's just going to chop along in here. And the setups that I just went through in the NASDAQ and the Russell are what you want to pay attention to. So the NASDAQ is setting up a pattern to rally, and all the Russell's doing is setting up a pattern to bottom short term. So the NASDAQ is going to continue to claw back, I think, on this thing. So this is the weekly, and the final chart we'll go through, and then we'll start to move on fairly quickly through some of the things I want to cover on the show today, is the monthly, and we're still in this monster downtrend, and there's a lot of work to do. So I think backfilling, pulling back, 0.382, 40, 50% of the move is going to be fairly real. We had just a couple of days ago, the Russell was up. Just a couple of days ago, the Russell was up nearly 18%. It's dropped back to 10% on the day and on the year to date. And so we're starting to see this thing stall here and go into this pattern that I'm talking about. This is, we go back to last year, it was really exciting as we came into, April and May. It was crazy time, right? Plenty of volatility, vertical markets. It was probably some of the most fun I've had in the markets in 41 years. And the scenario that I'm painting right now is way different, that we at some stage have to consolidate those gains that were made over the last year. And I think that's where the 55-week cycle comes in. If you go from where the collapse happened and take out from the high, we're right into that cycle effect. And so that's going to be a factor here for probably several months as we go forward. And, so we're just going to grind this out. And the fact that I'm talking about sideways doesn't mean that we can't actually edge out new highs in these patterns. They're just not going to have that acceleration. So the trends on a short-term basis, I'm going to go to our database next, because I want to bring that up so you can see exactly what's going on there. So let me just bring that up on the other screen, then I'll drag it over. Well, now I guess I'm off screen, so I'll get this up here. I know you folks see this every night, but I want to be able to unpack this just a little bit from the standpoint of what's going on with the database. Bear with me, just about there. Yeah, so what we have here is just the database is 17.80. Last night we had 3,300 cells. Let me just get this worksheet up. 3,335 cell signals that dumped out. What that means is that a lot of symbols, we were only in a 27% range anyway. We were already negative, anything under 42% on this database. So we're tracking right now 16,395 symbols, and about only 27% of those had short-term uptrends of any sort. And so now we're down to 17%. So the market's already vulnerable. I talked about this. Even though we continue to grind out here, there's so many stocks that aren't participating in this rally. I'm sure those of you that have stuff out there, you know this to be true. You're just not seeing a lot of movement in the stocks like you have seen in the past. And unfortunately, I think this is going to be, you know, uh, as we come into the end of April, we're going to get into all the cliches of sell in May and go away and all that stuff. And those things haven't worked very good for very many years. It's kind of, I don't know who came up with them, but whoever came up with them has been dead for a long time because they really don't work very good. And it's funny, I think, from my viewpoint, is I see a lot of younger traders being exposed to all this stuff, and they actually buy it like there's some kind of Bible around it. And most of the stuff is just garbage that's out there from that standpoint. So it's it's pretty interesting from that standpoint. Um, so I'm just yeah, okay. You guys are just really quiet. I'm just looking at chat line to see what's going on. Okay, good. I thought maybe the channel was off and I'm talking to myself. So anyway, yeah, so as we look at this database though, this this is going to be this is awesome because this is a reset, okay? We were only got to about 72, 73% on the rally up to the first time we rendered all-time highs prior to, as we came into the original 1.9 stimulus deal that was kind of driving the narrative at the time. What we're seeing now is a reset on a short-term basis. I'm going to go and just talk for a minute about the weekly or the intermediate trends. I just told you in all the analysis on all of the markets, intermediate trends are still up, secular trends are still up, short-term trends are neutral to down. That's the summary of what I just showed you. So the database reflects that as well. And as you know, I talk a lot about this. I'm data driven, so I have the ability to watch 16,395 stocks doing what I told the system. I am the original architect and designer of all the models and the entire process from portfolios, all of that stuff. Myself and my original partner, I did all the market buy and sell stuff, and my old partner actually was part of developing our dynamic harvesting tool and some other things that we do on a portfolio level. But this stuff here, it's interesting because I actually know that every one of these signals are my signals that are driving my methodology that I show you every day on the channel that helps you to be able to see all of these trends on a short, intermediate, and on our portfolio expert. You can see this stuff on a monthly basis. So what I'm telling you here is that this is really healthy for the markets considering where everything is at. The reset, the market's coming down. I just defined pretty much the lower values on S&P. They're not far below where we're trading right now. This 3880, 3860 is kind of the extreme on the S&P. The 12,300 on the NASDAQ, and on the Russell, there's a little bit different, but we're trying to find the bottom there, but we're within a stone's throw of the lows there as well. So when we see this is perfect setup. I'm going to show you here from the view of the database is that at 17% long, the typical downside goes after it goes through 22 is somewhere around 16 to 12% is the bottom. So we're pretty close. If we don't see any more selling, I think with the uptick today that we're seeing, we're probably not going to see any additional selling. It'll probably stabilize down here. It's already blowing out. I mean, what, 83% or 8 out of 10 stocks we have no trends in on a short-term level, okay? So we've already blown up the database from a reset viewpoint. And so now what we were going to see is, as we go forward, is we're going to start to see a positive rotation come in. We'll see some stabilization, maybe the NASDAQ will start to drive us in that scenario I pointed there in a few minutes ago. And then we'll see the database start to click back in. We'll get back above 22. Then there's then the next level is 27, then the 42. And once we get to 42, then we know we have sustainable trend. Then I'll be talking about 4,000, 4,100, who knows what on the S&P as that kicks in. But for right now, all the intermediate stuff is intact. So let's go over there and just take a quick look at that. As we look at the intermediates, it's 75% long. And we've got 12,379 symbols long. I'm just going to flash over to the daily again. On the daily, we only have 2,900 long. So it's very, and this includes mutual funds and ETFs. So if we go back to the weekly database, what we're seeing here is that it's 75% long. There's 12,370 stocks, mutual funds, ETFs that are in here. There's roughly about 6,800 individual stocks, I think, in the database. There's quite a few mutual funds and ETFs in here. But that gives us a feel of how many of these items are trending on an intermediate level. And this goes in direct correlation with what I talked to you about in the charts when we went through the technicals. The other thing to look at here, though, there's some sectors that have been in play that are starting to get a little bit long in the tooth. Basic materials actually bought last year, June 8th. We got a signal on a sector level. It's up 34%, 200 days of 164. And what that means, it's exceeding its average holding. And because of the rally and the structure and the amount of momentum that was behind the recovery rally we saw last year, this is why we're seeing these profiles where they're blowing up a little bit. They're exceeding their average holding on a level. So the next one that we're still a long ways away from, the conglomerates, has a holding period of 427 days. So these are trading days. That's the better part of 2 years. So these are very long-term from a secular viewpoint, not from a secular trend, but from sector viewpoint, are very substantial and sustainable. So there's a lot of things going on here. We're looking at the customer cyclical. It typically holds 353 days, a year and a half. It's into this thing 200 days, almost a year. You can go back and see we bought that on June last year. So one of the things that happened in our database, so you folks can get some contacts, maybe some build a little more credibility on the process here, is that it is, if you look back, last June and July is where a lot of our intermediate models came in. And they typically have a 200-day holding period. Let me show you where that exists here. And I'm gonna do a zoom in on this thing here just so you can see it a little better. So what I have here, this grid you're looking at, is it shows optimized models. So we have two basic models that run all these symbols, but the optimized daily holds typically about 40 days. Right now it's 10 days into the session here. Let me just see if I can bring that over so you can see it just a little bit. Bear with me. One more time. Yeah, just so I can get all this on screen here. What we're looking at the top line is average days hold, then standard deviation is 16, and then what we see there, or standard deviation is 10, and then current average duration is 5. So there's nothing in this is the short-term database, but we go over to the weekly, it's in this range right here. Let me just draw this so yeah, so the columns I'm talking about here, This is the standard deviation on the short term. This is the average long. The duration fulfilled is only 13%. So daily really doesn't matter. This column here, because we're only 17%, doesn't matter. But when we look over at the optimized weekly, now we have something of use here. The average holding, this is what I was talking about 200 days on all the models on the 16,500 symbols. This is, we have the average days 201, standard deviation 68, so we'll call it 260, 270, and the current average is 85 days, and this is the important number, is that right now we are 40% through the investment cycle or holding periods of the intermediate models. And what that means is there is a lot ahead. So everything I went through when you're looking at the technicals and what's set up on the S&P and NASDAQ and the Russell, this reflects through this database because this is everything. This has small, mid, large, mutual funds, different style boxes, everything is there. So what we're seeing then is that right now we're only 40% through there. Now typically we don't get to 100%, but we get in the upper 75 to 85% range. So we're maybe halfway through this cycle. And so that would suggest there's at least another 85, maybe 120 days before we start to see this thing get kind of stretched or long in the tooth from that standpoint, and just looking at the model. The other thing to look at here, and I've talked a fair amount about this, is our average profit here on all these 16 on a cycle is 29% per symbol. That's average. And the standard deviation is actually 70, so it's a big number. But if we look at the current profit, it's 23. We've actually realized about 75% of the profits from that in half of the time. So that number was higher. It was all the way up to 90. The little bit of pullback, a little bit of rotation that we've seen on the database has actually caused that number to drop back. And why is this important? Okay, so let's talk about that. And so this is important because this gives us a feel for what the expectations are going forward, how this thing is rotating. Too many people look at indexes and make an idea, come up with, here's what's going on with the markets with indexes. Most of them, virtually all of them, are weighted in some form or another, even cap weighted. The Dow Jones, which I haven't looked at in 20 years, will actually, that has a divisor that calculates. So all of these indexes are very top heavy. And when you start to look at the markets in depth like this, it gives you a much different perspective. So, okay. So, all right. A lot of details there. Let's go ahead and go back to the screens, take a quick look at the futures. Back only up 375 in the session, so we've fallen back again. We keep trading up into that 18 handle, can't get through there. And in fact, if we go over there and you look at the market grid, let's go daily market grid real quick. I talked about this earlier, and when I went through the futures, we're looking at the grid. 39 is R3, but 26, this is right. We've been stalling right between R1, R2 today, and if this thing were to start to sell off, we could easily see S1. Maybe we still get that range. Maybe we get basically an R2 S2 today if we start to see some weakness, and I think that's going to be determined. I believe the Nasdaq is leading the way, and our friends over at ARK are having a tough day again, down 5%. So this goes, you know, if you look even on the Nasdaq is down 1, and ARK Innovation is down 5% right now. There's multiple times the risk in these funds. They're very dangerously constructed. If you haven't seen the video that I did on rebuilding ARK, if I won't show you right now, but the rebuild, we're actually still positive on most of the ARK strategies on the year because we sold out a lot of the stocks that they own. And this is a problem, is they're so top heavy on how they're constructed. ARK ETFs are constructed exactly like almost every ETF on the planet. There's nothing different. There's nothing special. They're not really doing anything. They kind of hype themselves. I've heard people call them a pump and dump, but they're really not doing that. They're just trying to hype themselves, and they can't get out of their own way. That's for another time. Yeah, I love when these guys show up. Where my consistency comes from is using our software. And I've talked about this a lot. This channel is about supporting our software users. And if you get others, a lot of folks watch the channel, but that's what the goal of this is, to support our issues. That's why I just went through heavy details. And I guess every day I'm supposed to announce I missed a number. Oh, I was wrong. I don't know what people want. You figure out what's going on here. The guidance with the market grid and things and the analysis I put out there, you guys get this for free, and appreciate those that have signed up for the software. I just I love these guys. There's no one 100%. In fact, I promote about a 40% accuracy on 40 to 60% on accuracy on the models will make you a lot of money. If you're right 6 times out of 10 and you control your win losses, that's where you make money, not on accuracy. Accuracy is an illusion, always has been. So, somebody said nobody has a crystal ball. Uh-oh. So hang on. You guys got me this time. Look at this crystal ball. I do have one. You said nobody has one? Here it is. You got to be careful what you say. I never use nobody, always, or never for that reason. Anyway, so yeah, this is the infamous crystal ball that's on my desk all the time. So anyway, listen, this is serious stuff for running money. I try to explain to folks, our software runs like close to $15 billion of real money. It's no joke stuff, right? It's not like that at all. So I'm a YouTuber for one reason, is it does help our users. It gets us to, I start every video off with, I want to help you manage your portfolios and protect your wealth, not day trade, not scalp, none of that stuff. I don't put trade recommendations out on the channel. So whatever you get from it, maybe you need to look at how you're interpreting stuff. So, but this is the thing, folks. Man, I love our community. Okay, I won't go too much into getting too corny here, but I love what we've got here. Like I love comments. So I mean, I'm all on the. I want criticism. I want for you guys, like whoever came up with the Asian comment last night was brilliant, because absolutely right, that I talked about in the beginning of the show today. So no, that's what having a community is about. It's about exchanging ideas. Like I've told you, just don't call me a crook and a scam artist and all that kind of stuff. I'm good. I'm good with everything, really. It's all good. Yeah. Unfortunately, I'm not signed in, George. I'd probably mute you. So just cool it. Nobody wants to hear it. You know, I know. So, we've got, you know, this channel probably should be bigger. So you guys need to hit the like button so YouTube knows you guys like this stuff. And then also, tell your friends, spread the message. Is it is very, very sincere in what I do and all the work we do. And we work with it. My son Jay's on the line right now. He does our wave tech training. We're about to launch a uh, giant master class. There's some really cool stuff coming that I really do want to help you folks manage your portfolios. It's not about speculating and trading indexes and guessing. And one of the hardest things, I've had this conversation in the past, one of the hardest things you'll ever do is discretionary trading. What is that? Looking at a chart, going, yeah, I like it here, I'm going to buy it here, and then doing emotion. I'm working on a video. I've got it, we'll call it 30% done, on how to overcome emotions in trading, but also how to use your emotions to help you trade. And that video will be out on the new channel that I'm working on called ETF Hackers. So that is going to be significant because I think that um, that's that's something that I got. If you folks have ever looked at the old Market Wizard books, the first Market Wizard, there was a guy named Ed Sakota. Myself and 10 other guys went up to Ed's house in Lake Tahoe back in, good God, what year was that? 19, maybe 1986, 85, something like that. And we did something really interesting. And that's part of and how to do analysis of your trading. And that's part of what I'm going to share, that experience. And it was Ed that guided us through it. He was like the shaman guiding us through and getting us to talk about trading stuff. So I'm going to be doing a video on some of these things. I've got interesting friends and past and things with me that I want to bring up the channel. This channel here is daily commentary about the markets, about understanding software, database rotation, all that stuff. So I appreciate everybody watching. It's really really good. Yeah, so just while I'm in kind of in a break, what time are we getting to be? Yeah, we're coming in last hour already. So I do want to cover. I want to look at the Dow and gold and silver and Bitcoin, and then we'll open up to getting some of these other things out there, doing maybe a few individual stocks. Yeah. Bear with me 1 second, folks. Just 1 second. Okay, so guess we're Yeah, I guess we just, unfortunately, I'm not signed in as an admin right now, and I can't figure out how to do it. So otherwise, we get little Georgie Porgy out of our lives. I hate disruptors. You know, they suck everything out of life out of everything. So okay, so all right, let's go ahead and do what I was wanted to go. Let's start with the Dower here. You know what? I'm going to back up. Let's go to the 10-year, and we managed to get through this 10-period moving average on a daily here. So we're heading toward the 21 period moving average, 1.56. We should set up a high level pattern. If you recall, if you're new to the channel, I'm just going to zoom in on something here. Yeah, so as we look at this 10-period moving average, the day that we blew up to 175, we got an RXT sell signal on a market grid, and typically that will be a 2 to 3 day downtrend or sideways, and I thought we'd get to this 10-day moving average. That was going to hold. It did hold for 1 day. We're through it now. PPMs are flattened. We should try to rebound back above this. So what I expect to see here is that we're going to find the low somewhere around here, 1.68 to maybe 1.7, something like that. And we're going to consolidate up here and then set up further move up. If we look at the weekly chart here, you're going to see exactly what I'm talking about, is that we're likely to go into this sideways mode here. We get this volatility range. We just look at the weekly market grid, 1.61, 1.64, 1.64 is R2, 1.59. Probably where we're going to finish is around S3 here weekly, and then we should start to set up a broad trading range. I think the highs that we saw last week at 175 is probably going to be it for a while. Ultimately, I talked about this, we're going to head toward the 200-week moving average, and that is 1.98. So that's where that's going. So let's go ahead and quickly go over to the Dower next. So Dower has been moving back towards its 200-week moving average. We talked about this, if you go back multiple weeks ago, that there was something that was going on. And we just right at the 40-period moving average, 92.44, high 92.59, last 92.48. So we're trading above it. There's going to be resistance here, but we've got all the PPMs looking pretty good, actually. PPM 1 is at a 0.20, not quite at trend level. And this is a weekly chart. So what I'm expecting to see us ultimately do is to go back and test those highs around 90, 94, probably 94 and a quarter plus. So that's going to continue to keep moving higher. I don't, I'm going to go to gold here in a minute, but I don't think this strength in the dollar is really going to affect things that much. And you would think after 1.9 trillion creation of new money, talking about $3 trillion that I talked about in the opening comments today, that would be something where you would expect to see the dollar depreciating because of all the new dollars out there, but that's not what's happening. It's the opposite of what you'd expect here, and I do expect to see this thing continue on. I'm going to go to a monthly graph just real quick so you can get a perspective here. So when we start to look at the monthly, this goes back to 2005. We've really been, if you wanted to nail it down here, we've really been in this very stable downward mode for a long time, stable in a broad range. And that is basically if we chop off the tops here and we just kind of put a range in around, we'll just call it about in here. For the most part, this is the primary range where we spent most of our time in there. These upper levels, without running some stats on them, these are probably a first almost 2 standard Ds from normal. I bet if you did an average price of all of these right here, you're right down the middle around 91 handle. So we've really just been waffling around this mid-range value, especially if you went annual high-low values. If I could do an annual chart, we could actually run this pretty easily, but you would see it's probably smack down the middle around 91.5, 91.25 is that value. So we get a little bit below it, we stay there for a few months, we go back above it. So we've really been in a stable range. And prior to this, going back to 10 and 11, after the crisis, we actually had a similar range, which would probably look like this, where we stayed within a more defined range into these brackets here roughly. And that, so what we've done is the Dower's actually appreciated over time. It's appreciated to this level here, and now we have this next stair step range. Is that going to continue? I don't think so, but I think we'll remain in this range, and we're likely to move up toward that 94 number that I just talked about. Yeah, I see the troll is back. One second, folks. One second, folks. All right, so let's go ahead and take a look at gold here. I know I cover this in detail every night. We're going to start with this monthly graph. This 21-month moving average, I talked about this last time. All right, so let's go ahead and take a look at. Sorry, I've got an echo going on here, folks. I apologize for that. Okay, so we're going to look at the gold, and we're up 850, 1733. I'm going to back up. I've been talking about this pattern forever, it seems. But this is another one of those right shoulder patterns that are likely to set up. And let me draw this in for you so you can see that. Okay, so the pattern that we're setting up here is most likely a nice right shoulder on a short-term basis. And what it's setting up is basically what you'd probably read in an Edwards and McGee type manual, like a cup and handle kind of thing, where you get the right shoulder. What I look for here, I talked about this in a previous pattern a few minutes ago, is that when the 10 and 21 period moving averages cross, so we're getting that phenomena happen right here. So that's going to just suggest a minor hesitation in this pattern, but what I'm expecting here is a pattern that's going to set up like this, and we're going to come back in toward this 1830s. I'll get the exact numbers here in a minute, but we're going to move up into this range and set up some sort of range that's likely to stay in here, but I think it's going to be, let me clean this up already. I got a mess going. Is this will be the upper end of the expectation, and then we should set up a low somewhere down in here if we haven't already seen it right off of that low, and then we should see it move up into this 40-day moving average. That's 1771, and then we should set up some sort of sideways pattern here, and this will lead us to the weekly chart that I believe will ultimately, I'm drawing these start spikes up, so don't expect that explosion to happen, but this is what's going to happen as far as the patterns go. So let's go ahead and go to the weekly just so you can see how this starts to break down. So now we get, this is the weekly pattern setting up. So now we're going to ultimately, which is similar to the 40, 1774, is the 10-week moving average. We get up to the 21, 1824. That's the top on the daily chart I just showed you. We continue to bleed off some of this downward momentum on the weeklies during this period of time. And we're looking at 4, 6, 8 weeks before we'll actually see the markets actually come off of that range as far as, as far as the overall pattern and the intermediate pattern goes. But I think we've seen the low of gold down here just below this 1600 handle, and we're just working the pattern now. We still have a lot of downward momentum to bleed off before we'll be able to get through that level. Okay, so now we go to the monthly graph here. And this will be important to understand as well, is that the larger pattern here is that's setting up. I mentioned going way back on last year in June when we spiked up. We hit the highs at that time. I thought we were going to set up a dragon head. We started it, but then it continued to fade and got a little weaker than we thought. But the 21-month moving average is the primary secular trend here that you want to watch. 1735 is that number. We're trading 1733. That we're going to stay above that number on a monthly basis. PPM2, which tracks that, is at a plus 0.64, and PPM1 has rolled over a little bit, so that means that the 10-period moving average at around 1860 is going to be the top. So what we really are looking for here is to get back into the range around the 1735 to the 1860 level and start to work in that pattern I was just setting up. Okay, so let's do silver. Silver is setting up what I call the dragon head. So typically what happens, and we're trading right on support right now. Let me bring that up so you can see that number. Yeah, you can see the 10-week moving average 24.74, last trade 25.19. The low's been 24.84. So that's your demand line, is the 10-month moving average on a long-term basis. The PPMs, even though they've rolled over a little bit, are going into that maintenance mode. They're up big numbers, 2.58, 2.05, and 0.92. So we're definitely seeing some of this stuff start to move into this this major support and into the market grid itself, with 24 S1 2538. So we went a little bit below that, not quite to the S2 number. R1 2750, this is a monthly, is 2717. So we're still working within that range, but we should hold this 2474 level. That should be substantial numbers. So let's go all the way to the daily and then step it back in. So we're coming down to 200-day moving average, which is going to be similar to that 10-month moving average, and value 2519 is, or I'm sorry, let me look. That number is 2477, and then we are printing down toward the lower end of this range for the market grid today. The low 2502, 2505 was S1. 2540 was R1, so we've done a R1, S1 value for today. And PPMs are really negative here, so there's a fair amount of work. What it's telling us is there's major resistance between 2590 and 2617. Take a quick look at the weekly, and then we'll move on to Bitcoin next. Here it is, the 40-week moving average is at the 2496 level, kind of corresponds with the 10-month and 200-day. All those numbers, a cluster right there, just right below 25 handle, 2490, 2480 ranges is going to be substantial. Now, there's no real momentum on the short-term basis, but on PPM2, which is 2562, that should have enough upward pressure to keep things going. But the 2496 level, the PPM3 is up at a 0.69, so there's only around about 30% probability that we'll get below that value of 2496. So you can definitely be playing against this level with a pretty tight stop on that stuff. So So uh, let's go to Bitcoin. We'll do Bitcoin and Ether real quick. Bitcoin is actually set up a couple dragon head. This is a dragon head. We got the new high. Now we're setting up a little minor one, and the 21 period moving average, simple 21. This is a daily, so I don't have the typical hourly or 6 hour chart set up. So this thing updates on a daily. So the market grid for today, we basically traded just about the extreme. The high 57,213, 57,593 was RXT, R3 56,825. So we traded between those two numbers. On the downside, low 53,724, 53 S1 was almost a dead-on hit, and that also had a lot to do with that 21 period moving average being right in that range as well. And we've got PPMs negative on PPM1, so there's resistance up at that 56,697. That's going to continue to be a resistance point. And then the 21 is 54,178, so expect to stay on a short-term basis in those ranges. If we go to the weekly chart, you see this is setting up this giant pattern up here, and the ranges are insane, as you know. I've said before that some of these ranges that we're seeing here are equal to what daily range is equal to what Bitcoin used to be worth, right? So $2,000 and $3,000 and $4,000 ranges some days. But if we look at the market grid on a weekly basis, it's going to stay about the same as we come into next week. It's going to be that 61,853 is R2, 59,591 is R1. So that's held so far. On the downside, we got 52,988. We got just about to an S3, so R1, S3 for this week. But this range, you might want to jot these numbers down. This should be a good range for next week, so you can buy down on these support levels and be able to scalp out of this thing. I don't see it accelerating in the trend, because if we look at the PPMs, they are actually in the maintenance mode, but this really suggests that we need to consolidate this amazing rally that we had. I remember there's a video on the channel that I actually take that I was talking about Bitcoin going to 23,000 when it was 11. That sounded like a big deal. Well, that was like 1/3 of where it actually went to. So that is definitely something that we are we're looking at. So let's see here. Let's take a look quick at Ether on a weekly. Same kind of pattern setting up. 10 pair moving averages right there at 1634, low 1646, last 1651. So we're trading right on support right now. RXT for the week, or I'm sorry, STX for the week, 1596, R3 1648. So we're trading in that support range right now. PPMs are still very positive, so we should hold at least the market grid ranges. So just like with the Bitcoin, I would jot down these numbers just so you have this. These will be good numbers to trade off even in the next week, because the volatility is going to stay about the same. This market grid will be basically flat. It looks like it should stay fairly flat. What isn't happening is that 10 pair moving average is going up at about $50 per week. So all that support number is going to move up. So we should see it support somewhere around 1,700 or so, something like that should be support as we come into next week, and we should stay within this grid. So somebody's been asking for platinum. We'll take a quick look here. This platinum weekly, actually pretty positive pattern here. We're upward slope. We actually got above the grid last week. We're back in it. Didn't quite get an RTXL, but we're definitely got an upslope. And the PPMs are plus 0.81, plus 0.73, so there's very good support down at the 973 level. I just want to flip to daily. We'll go backwards a little bit. Now, what did I do? Yeah, for some reason it won't give me, I'm not sure what symbol trades here. All right, let's see if this symbol works. I'm not sure I had the right contract up there. Let me just go back here. Yeah, so there was something wrong with that symbol I clicked on. This should be the right one. Yeah, we're seeing ticks come through. So let's try this again on platinum. So you've got quite a bit of a cluster of moving average above 1178 here. And right at 1198, 1192, 1190, all the moving averages are the same. PPMs are actually negative across the board. And so we're probably setting up a right shoulder here. So we should see this thing, if it can hold the retracement values, maybe 0.5, 0.618 retracement. Let's just do it real quick. Let's look at this last rally here. So see where we are here. So those numbers are we're right at 50% right now. 0.618 be 1162, and then down to 1153 would be extreme. If we hold that level there, then what we should see is something set up like this. Is a shoulder setting up and ultimately moving up in this range. What we'll need to see here from the PPMs is a break above those averages I just talked about at that 1198, call it 1200. Get back above there, you should set the tone for this pattern to set up here and move, back toward these, probably the resistance zone around 1300 and maybe a re-challenge of that top there. We'll see how that all sets up, but that looks like it's ready to go. Yeah, so let's look at Tesla. So let's go to a couple individual stocks. It's about 22 the hour. So let's take a look at Tesla. This is setting up a very similar pattern here. They pull this over so we can see it. This is basically a right shoulder pattern. This goes to the NASDAQ analysis I was talking about earlier, is that we should see the NASDAQ start to firm up. We are potentially STX is 634 on Tesla. We're trading 632. So if we close under 634 today, it's going to get an STX buy signal. So that means we should move back toward the moving averages 668, 675 range. Not a big deal, but should at least move back in this pattern and into the grid tomorrow. And the grid is probably going to turn down just a little bit. So there's some potential for further prices down, but the PPM suggests that the short term is in a downtrend for sure, and there's still a number of days before we'll get to that setup. Now this goes back all the way back. We go back to the January 8th when Tesla printed a high. We got an RTX sell signal. We went sideways. Now we've come down into moving averages. This 21-week moving average is still the demand line. That's at 677. So that goes along with what I just said, setting up a bottom, moving back into 680. That's what this is telling us. Whether we do it by the end of the week or early next week, we should hover along that simple 21-week moving average. That should be an easy number to look at. Let's go to Apple real quick. And yeah, Amit, I don't know if there's any rare earth stocks or anything that you might be able to do along those lines. So yeah, we'll bring up GME next as well. So here's Apple. We're locked in a range here on a weekly. 125, 127 is the lock. I'm sorry, no, 117, 127 is going to be your lock. So we've been low 120. Could be a little more downside. Let's flip over to daily just for a minute so we can see what that short-term pattern looks like. Yeah, this thing is setting up a bottom here. This is definitely setting a bottom. 200-day moving average is right there, 116.60. That's going to be major support, but there's some work to be done here. Just like with all this stuff, the NASDAQ and all these things, that we have probably 3 to 4 days of more chop in here before we're going to be able to set anything up. And I would be watching. Yeah, I don't know about 70 on Apple, but if for Apple to go to 70, then the S&P would be probably 36 handle maybe. Okay, so let's see here. Yeah, if you folks remember back in February, I was putting warnings out about Apple and Tesla rolling over, which they have done, but now we've came very close. I thought we were going to see some further numbers down in Tesla a number of weeks ago. We didn't get the weakness. We got a reversal, and now we're setting up this pretty decent pattern. There's still some more downside. Like I said, the number to watch for today's close is the STX 634. Yeah, so yeah, George keeps reincarnating. It's pretty funny. Okay. Um, let's do this for, let's see, let's go and take a quick snapshot as we're getting close to the close here of the markets. We're printing down to the lows. Here we are. Like I was talking about this earlier, that we might see this thing roll over and move down into toward that the handles here. Let me go over and take a look at this. So we printed up to the 31 level just above R2. Now we are moving toward S1 where 89 is the low, 80 S1 38.87, so we're pretty close. Below that is 73 and we get into those moving averages that I talked about. I still think these things are vulnerable to the downside, that but there's going to be quite a bit of support, as I covered earlier, in that range around the 38.80 to 38.66 level. Yeah, composites down a $1.63 now. We're actually about on a daily to get a composite buy, STX buy if we close under 13,030. Last trade 13,010, 010. So we're pretty close to printing that out with about 12 minutes to go. It looks like we might get that. I still think that that these markets are setting. This is the right shoulder, and I showed you in the Nasdaq coverage where that might go to. Let's do a couple things here real quick. We don't have a lot of time, so let's focus on the close, I think. Um, and I'm going to put up. This is the stock, the PLTR. I'm going to bring that up. This is I proclaimed this stock several weeks ago as the most dangerous stock on Wall Street. I mean, I think this thing's still going to 15, $12. And the key is if it closes under 22, it's trading 21.90 right now. And we got a spike 10 days ago or so down to 2018. So now we're printing down here again, 21.93, starting to get low, but we're getting acceleration on the downside of the momentum. So this is starting, this next leg down should actually come down to around 14 or 16. Yeah, Craig, it's going there just because that's where it belongs. uh, Down here, uh, yeah, the rationale is technical, and we'll see. We're just getting a lot of an acceleration. There's not very much data. This company's been around a long time, but this thing is going, it looks to me it wants to collapse back to the offering price. This is pretty typical of stocks, even though they have a corporate history longer, they just went public. They're just going to have that, you know. That's the way it's going to look for a while now. And I agree with Pedro that this thing is way overpriced, and but it's just one of those stocks that got super hyped, and a lot of folks got caught in that thing. And the key will be on a weekly basis, this low here at that 2018. But I think a close under 22 is going to be enough, set the tone for the next leg down. So let's just draw this in, what the expectations is possible here. And typically you won't get a equal way, but you'll, let me draw this in quickly. So yeah, this is a problem. The structure of this stock is there's from the offering just three legs up, and now we've come back to the base where that second leg was. You can even call this low. Once you penetrate that, then you flip the script on stocks like this, and typically what will happen from this high to this low, you get a retracement, which we got, and then the next leg down is I'm not going to do the calcs, but you can do it if you take the length of this first wave down, take 0.382 of that length and add it and subtract it from that high. That will get you the projection for the low. So maybe we'll just do that for fun while we're filling a couple minutes. I'll show you folks how to do this calculation. So the high in this bar was 45. The low was 20. We're just going to round it off. 20. So you got a 25 sell-off, 25 handle sell-off. So 25 times 0.382 is 9.55. And that high here is, high was 27.47. And take 27.47 minus 9.55. 1792 would be that target. And if we go to, typically if it exceeds that 1792, then it would go to a full-blown retracement, which would be a 0.618. So it's 25 times 0.618 gives us 1545, and that's pretty ugly. It won't get to that level. It'll go somewhere, I think, between 17 and 15 would be the actual calculation for this thing. So let's, because if we took 27, just round numbers, and minus the 15, that puts us at 12. There's the 12 number. So that would be full blown. So I will call it 17 to 12 on PLTR on the downside. Okay, let's do a couple stocks here. Yeah, Craig, no problem, man. So good old Neo, we haven't looked at this as a weekly, still under pressure, probably heading toward the 40-week moving average. That number is 33.37, trades 36.77 here. What's going to happen? Keep talking about this 1021 crossover up here. Let me draw it in so you can see this real quick. So right here, the 10 is coming down, the 21's coming over like this. And so when that crosses, typically there'll be a low probably right at this 40. When those two cross over, then you're going to work a range if you're lucky. So here, let me clean out some stuff. From a market grid viewpoint, what's likely to happen is you're going to see the grid turn down, probably narrow a little bit in range because the last three ranges have been narrow compared to the previous three. So we're going to see some narrowing going on here, and then you should work this market grid range. And let me bring that up so you can see it, because you might, if you're trading a stock, these weekly numbers are going to be valid numbers. They're going to be somewhat similar. They might be a little bit lower. The STX number might be around 29, but the support level is 37, 31 on the downside. Upside resistance 40, 46 tops. And that puts you right into where that 10-week moving average is going to be from that standpoint. Yeah, let's go over and take a look at the markets. They're getting pounded here. Here's 84. Let's go over to the level 2 new lows on S&P, down 16 handles. Yeah, it goes to more or less what I was talking about on the opening comments, that there's just a lot of pressure. You can't keep putting, floating out tax increases, all kinds of stuff, and expect the markets to respond positively. And I don't know what Powell and Yellen were saying, but it doesn't sound like anything good. They're not likely to be able to spend the market. So we're punching out lows here on the S&P. Just printed 82.75. We've got about 4 minutes to go, so pretty negative close to say the least. So we printed almost an R3, just short of an R3, resistance 3 to an S2. So we worked the entire range of volatility as we come into, as we look back on what happened today. Definitely a lot of negative stuff going on here. I'm going to flash over another screen so we can look at the NASDAQ. And let's do something here. We've done this before. I just want to maybe watch the NAS. It's a little more. Yeah, so here's the NASDAQ 5-minute graph here. And PPM's all rolled over. And they're definitely spiking down here quite a bit. 12,800. I talked about some of these numbers earlier today when we went through analysis. So we're getting down to the extremes on the NASDAQ. There's still more possibility. I think it was 12,500 on the futures. To extreme would be 12,300. So there's potential more on the downside. And how's our... Yeah, ARK is down almost, ARK is almost down 6% right now. So not a good time over there. That's something I talked about last week, and I'm going to get this set up. I'm making a note to myself, is that I want to do like a bunch of the international indices. So I want to, just go through like next week. You guys remind me, but I plan on, we'll do China and Europe and all. We'll go through all the major indices. Yeah. So what? Yeah, so looking at 5-minute VIX is starting to spike a little bit here. We did get down below 19, and it's funny how that's promoted as a positive. That was the negative when we got below 20, and now we're back at 21. So this is a 5-minute graph here. Let's go to a daily so we can get a better perspective. Yeah, so it's pretty low, and it probably should be compared to where the market is. But I know this is not the pure analysis as in other charts, just because it's more or less like it's just the way that it trades. But we should push back towards maybe 23 on this thing. So that would suggest there's a little more downside on this market right now. So Yeah, I just want to, let's focus on, we got 1 minute to go. Let me go over to this other screen. There we go. Don't even have a minute. We closed. So let's just watch the last, see what kind of selling. We printed 79 low on the futures. See if we can punch out new lows after the hour. Quite a bit of heavy selling coming in for sure. New lows, 77, 75 prints. New lows again, 750 prints. Yeah, I'm just looking to see if there's any activity. It looks like machines are driving this thing. It doesn't look like it at the moment. Oh, there we go. Yeah, they're in there playing. Looks like the machines are trying to come in on the buy side just a touch here. Yeah, so yeah, we got 1 minute in, so we'll hang out for another minute or so, and then thanks, Steve. I appreciate that comment, really do. Richard, thank you, thank you, thank you. You know, I got you almost 2 days on WaveTech, and if you are WaveTech, then thanks for the tip. You know, Kelvin, you're absolutely right. Yeah, let's. I'm going to come back on screen. We'll talk about a couple things, and we'll wind down the session today. Yeah, Kelvin was just saying that Yellen just doesn't handle the press well. She really doesn't, and good God, I mean, Jay Powell is like the most boring guy in the world to listen to. And when he's doing his speeches, he smacks his lips in between sentences. It's brutal. It's absolutely brutal. Yeah, that's funny. I have yeah, she may have lost her wand. I need to get one of those video things where you can replace the head and take my fairy godmother, you know, video that I did and put Yellen's head on it. It'd be really cool to do. Yeah, so let's do a couple comments here as far as what's going on in the on the chat line here. The ER, so someone want to know what the ER ratio is on WaveTech, and the ER ratio is the win-loss ratio versus the percent bullish. So otherwise, you look at when we run a model on a stock or index or whatever it is, it will do all the trades, and we keep all the stats. And this is something that I'm doing on this video that I was talking to you about earlier in the new channel that I'm setting up, is actually the ability for you to look at how your trades, you have to map out your trades. So we do everything along the lines of what I've taught for many years, is we build expectations on trades. We look at our average, what our losses are on average, how many times we're right, what the win-loss ratio is, or otherwise how, you know, the old thing, and a lot of folks, younger people don't know this, but know when to hold them and to fold them from the gambler. What that was about was know how to, you know, you look at the ratio. So how much you need to have your winning trades be, it's nice if they're 2 times bigger than the losers. So if you make $2, you only lose 1 on your losers, and you're 40% right, actually 50% right, you will get to a 100 ER ratio.
So the ER ratio is that difference between the average win and the percent of trades that are correct, and look at that ratio. So if you're at a 40%, you have to make $2.50 to get to a 100 ratio. And if you're a WaveTech user, you'll see that there's a lot of ratios. We usually tell folks to do 100 plus, maybe some people 150. And I know that product's been around for 20 years. A lot of people use a 250 plus type number. So they'll go, so I want an ER of 250 or better. So the beauty is there's almost 17,000, 16,500 symbols in there. You can actually manage those uh, and you can see all the numbers, so you know exactly what the potential or what the capabilities of that model on that symbol is. And we run those stats on every symbol, all 16,500. And then there's some composite stuff that you can look at on the database as well. Okay. Yeah, so Brian, I talked a lot about this. I didn't go through the inflation. I think it was 2 Sundays ago. I spent a lot. I've been talking about inflation expectations. One of the things I'm going to look at here before I move on, because we were looking at, yeah, the 10-year kind of stabilized. I didn't know if we had some kind of spike in the 10-year or not, but there wasn't. But yeah, so as far as inflation expectations, they're high. I think we're going to see inflation kick up. I think interest rates will continue to move towards 2%. Didn't go through a lot of that dialogue today, but there's definitely a lot of upward pressure on inflation. A lot of it has to do with shipping, the shortage in a lot of materials, and everything that we talked about. We didn't really go through this number here today, but we look at lumber. I saw one of the funniest memes out there. They had I'm trying to think, it was like 2005. They had a guy with a pickup truck, and it said, I think it was $5,000 worth of lumber in 2005, and the truck was all loaded up. It was about to tip over, and then they had $5,000 of lumber, and in 2021, and it had like 22 by 4s in there. It was pretty funny. It was a great meme, but it's pretty accurate. I put up on this chart here, this is a daily graph of lumber, and it's actually really funny as we look at this. Funny to me, irony funny, is that this is a big deal. And even though we saw new home sales down 18%, the amount of new building out there and permits are still expanding, but the inventory is disappearing. And that's why sales were down, because there was no inventory ready to buy to a large degree. And, so there's a lot of stuff that's under contract, but that is funny. Yeah, that's funny. Serginko, I think is the right name. Yeah, that was the funniest meme I think I've ever seen. It was really funny. But it's very true. And we look at this thing, and we go to a monthly graph on this thing. It's insane what's going on. This the meme to the moon. This is lumber to the moon. And what I expect here just on lumber is this thing's going to set up a really one of those high level consolidation ranges, because what happens here is once you get to this parabolic move like this, then you have to consolidate, and the key numbers that you want to watch on lumber is going to be this high here at 530. This is a nearest futures chart, so it could be a little different because this is one of my custom futures, nearest futures. I determine the rollover points in the contracts, but that around that level if we trade down below that level, then that would tell you that we're probably done. But what's likely to happen is to stay within the grid that I'm going to put on the screen here, which is this grid is going to remain pretty high as we come into next month. We only got a week to go this month, but the massive range 1003 to 591, but you're probably going to, with the way this thing's trading, look at maybe the potential, for 975, maybe even up toward that RXT number next month, and the key number will be S1 787. But the biggest number on the chart here is this 500 number. As long as we stay and do a high level consolidation, there's probably going to be another leg up, which tells you the housing and all the stuff is going to continue. And it kind of just circle around and just mention it again, because somebody asked me, about the forbearance and all the rent stuff that is coming due in June and what the effects are going to be. Well, the effects are going to be they're going to extend everything. There's not a chance they're going to let that thing roll over. I don't see it happening. So anyway, I think that's it's 4x. It's exactly 4x, and that increases the cost of building a house right now roughly by about 25%. So some of the inflation in houses, believe it or not, when I was a much younger man, I used to be a real estate appraiser and I was in the real estate business. And one of the things you have to do in appraisals is do something called replacement costs new. So if you're doing a Fannie Mae appraisal, you look at the market forces, what the market's doing, and then you have to say, what would it take to rebuild this house with similar materials? And they've got it's sort of like a blue book that you can come up with all the material costs. But lumber itself has increased the price of building a house by about 25%. So it has a huge impact. Copper and things like that. Copper isn't used most of systems around everything. Everybody uses PEX. So that's not really an issue at all. But this is, copper is used. It's used in a lot of other things, but it's not really what it used to be in housing. People used to run copper pipes all through the whole house. Well, now it's PEX, and typically the attachments at the sinks are copper. So, yeah, you're probably right, Pedro, that you probably are, 5+% on inflation, and it's going to get much worse. And the measurements that we get from the government are a joke for sure. That's for sure. Yeah, I don't know. Let's take a look. I haven't really looked. No one actually asked for that stuff. So yeah, look at someone was asking about Home Depot. We've actually got a potential for an RTX monthly sell signal, but I think really what it's doing, it's consolidating up here. If we go over to a weekly chart, then we're going to see that it's breaking out of this range on a weekly basis, and PPMs are all turning up. But yeah, so Home Depot is happening. I was there the other day, and they're definitely doing some business over there. People are improving their houses. I mentioned in the early comments that an entire one of the neighborhoods where I live, there's literally, I think there's 1,700 or 2,100 houses right in this little block region. It's multiple development. It's a large development, and there's 2 houses for sale right now. 2. That's it. And there's at least 8 people from California that want to buy it. So, and that's no joke. So anyway, yeah, yeah, Connor, you're asking what does it mean yields are overbought? I guess it would be oversold because as yields go up, the bonds go down. That's basically why there's a little bit of a bid in bonds right now, is we're just seeing some profit taking, and we also spiked up to 175, was kind of ahead of schedule. And technically, we got a minor sell signal at 175. So this is really just a consolidation that's happened there. I went through a lot of details in those. Um, um, yeah, so Nanya, yes, Nanya. Yeah, we do training every Tuesday. If you're a subscriber, you should get a email from us on that. Yeah, Red Rocker, you're right. They are. I I met a guy seemed like a pretty good guy. Just came from California. Said change your license plate so no one knows that you're from California. Just get out. Don't let them know you're from here. They're gonna run you off the road. So it's kind of crazy. Yeah, Chi-Town Tony. Yeah, so he's saying Home Depot had a daily buy signal. Let's take a look at it. Wave Tech. Let's see, on an optimized model, it does not have a buy on a short, but maybe it was a weekly. I'll take a look at that. Yeah, entry day 322. Yeah, so a couple of days ago, it's up 1.2%. So this little breakout of this pattern. So I had a nice buy on here, exited out, and I was rebuying the breakout. I call this the, let me bring that up here so you can see it. Yeah, so I call this the Jim Cramer trade, buy high, sell higher. It's but definitely this thing's been pretty choppy. It's got an excellent rating. It's had a couple of sales here. Came back in July. That's where the previous trade come in, and now it's coming back in. Short-term stuff is probably as well. Yeah, so short term, it got a buy at 267 on 312 on a daily, up 8% so far on this last trade. Pretty choppy though on the daily. This thing's just been whipping around here. So, okay, folks, it is 18 after the hour, so I'll hang around for a little bit. Anybody have any? Okay, yeah, all the home builders too. That's interesting. Yeah, in spite of I'm talking to Tony Chi-Town, in spite of the 18% drop in new home sales, right? Yeah, I did talk a little bit about the Dow. I don't think the Dow and the markets are correlated much. Um, yeah, what are you talking about there, Jay? Yeah, okay. Yeah, anyway, yeah, I covered Bitcoin a little bit ago, so that'll be in a replay as soon as we finish up here. It'll take us probably 20 minutes or so to get the video all mocked up so that you can actually see where I talked about everything. So we always go through the actual video and we put on the timeline exactly when I was talking about different things. Can you short gold? I wouldn't short gold here. I would I definitely think gold's got some upside. Yeah, it's kind of interesting. Pretty nasty close today. Russell down 235. Composite down 2. So, I talked a lot about this spread here. And this is significant, this spread here, is that it's going to continue to move lower, I think, in this pattern. Ultimately, we're trying to find a low in these things, in this level. So, okay, folks, I think we're going to call it quits. Still got about 500 hanging around. So just remember, if you want to support the channel, the best way to do it, I appreciate the super chats and those type of things. Russell, about 3 or 4 days, Kelvin, I'll be covering on the daily videos. I'm going to stay on top of that. But just so you folks know here, this is one of the ways, WaveTech. We also have, some other things that you can cover as far, you can use as our portfolio expert software. You can go to this link that I've got on the screen right now and do that. It's $3.18 a day. It's not a lot of money, especially, it's not even one good trade to pay for it. But that's about it. Yeah, Brett B, we need to hook up. I've been thinking about you lately, so I need to reach out to you. I have news for you. So anyway, folks, thanks again for watching. I think we had another great session, and hopefully you got a lot of value out of it. Hit the like button, subscribe if you haven't. And I do videos every day during the week. So cover the markets. So tonight and tomorrow night will be the last 2 videos. Yeah, yeah. I've been telling you, be careful with the Russell here in the last several days. It's been pretty rough. So, okay, folks. Thanks for watching. I'm trying to find.
I'm your fairy godmother. I'm here to make it all better.
All right, I got to play this for you guys to enjoy this last.
I'm your fairy godmother. I'm here to make it all better. With just a wave of my magic wand, your troubles will soon be gone. With a flick of the wrist and just a flash, you'll land a prince with a ton of cash. I'm your fairy godmother. I'm here.
You're absolutely right. No sound. So Runa commercial. I love this stuff. It's like 3 espressos in one. Only drink half of it during the show, so that's pretty good. Um, but thanks again for everything. Sorry I didn't have the sound on. Just thanking everybody for showing up, and we'll have to see what Jan and Yellen and Mr. Powell come up with next. So enjoy. Have a great afternoon. I'm off to In and Out, and again, it's burger time. So I will talk to you all soon. Thanks again.